Hi everyone, hi YouTube. Time for some more economics discussion. One of the things that I've been thinking about recently is we know that wealth inequality is bad. We know that it keeps getting worse, and we kind of understand the mechanism behind it. But what does this actually look like for the different families of America? And what I wanted to do in this video is sort of break down a budget for 5 different families in the United States based on their income and sort of look at what their expenses might be and try and break down what their expenses are and see if we can notice anything about those expenses that is leading to the growing wealth inequality. So what I've got here is an annual budget for 5 different American families. We have a working class family, a middle class family, a rich family, a super rich family, and a billionaire family. These numbers are not exact figures. They're not the average income or the average tax. What I tried to do was to create a believable set of expenses for a family living in this condition. If we start with the working class family, you'll see that they pay rent, they don't have a mortgage. The majority of their spending is essential spending, spending that they couldn't possibly cut. They have a tiny bit of luxury spending. This is about $350 a month on luxury spending. That might be, entertainment. And then we've got sales tax, interest on credit cards, Social Security, and Medicare. Going over to the middle class family, you see that they don't pay rent, they have a mortgage, they have part of their mortgage payment is going to things like the homeowner's insurance and property tax and interest payments, which is not going to contribute to equity of their home. Part of that payment is going to go to paying off their loan, which is going to build equity, and then much more luxury spending, which means much more sales tax. Now for rich, I put their income as $750,000. I get the feeling that some folks won't consider that to be rich. They'll consider that to be like upper middle class. But in either case, we're talking about like a family of doctors or lawyers or maybe small business owners that can pull in that amount of profit from their business each year. Income tax, quite high. This family also has a mortgage on a larger home. That's why their payments are higher. Their essential spending is the same, but they're going to spend a lot more on luxuries. And they don't have any credit card debt because why would they have credit card debt when they have so much income? For the super rich, now we're looking at like large business owners. Maybe they are partners with a few other people and their business brings in $25 million in profit each year. They split that amongst themselves and amongst their other partners. Income tax, again, quite high. Property tax, quite high. I didn't put them at having a rent or a mortgage just because I assumed that with that much money, you're not going to bother with a mortgage. And then Social Security, Medicare. And then, of course, billionaire. What I did was $1 billion times 5% is $50 million. That's how much they're making in passive income. They are paying less income tax on that because they're paying capital gains tax. Since none of their money is actually coming from work, it's all coming from the money that they already own. Property tax, I just said they had a $10 million mansion. Obviously, not all billionaires live the same way, but if you've got a $100 million mega yacht, maybe you pay more on property tax. Luxury spending, $5 million a year. I couldn't possibly think of how to spend this, but I'm sure billionaires could come up with a way. Sales tax is going to be a lot higher on that $5 million luxury spending. They don't have any interest they're paying on their debts. Suppose it's worth mentioning one of the tax loopholes that has sort of made its way into popular conversation is taking out debt instead of selling your bonds. If they paid any interest that they would pay would result in less tax on their income. So what I did with these numbers is I made some pie charts. to break down what each of these families is really dedicating their money toward. Starting with the working class family, they have 0.3%. That was that little itty bitty bit of money that they had left over after all of their spending. They're probably using that to pay down debt, and they will probably never escape debt. You can see that they've got about a 20% tax burden. That might seem kind of high, but the reason it's that high is because there is a lot of regressive taxes in the United States. Sales tax is a regressive tax, so they're going to be paying a larger portion of their income on that. Social Security and Medicare are both regressive taxes. So even though this family is kind of barely scraping by, they still have a pretty large tax burden. Go over to the middle class family. They're not spending nearly as much on luxury or regular spending. They have a mortgage, they're building equity, they have some money left over for savings. They could use that to buy assets, they could put that in a savings account, although that's not really wise. And then they have a tax burden of about 30%. This group of people are rapidly disappearing, and it really just comes down to the fact that even though they're able to save quite a bit of their money as assets, not nearly, I mean, obviously they're saving more than the working class family, but they are not saving nearly as much as the other American families that we're going to go to. So then we go to rich. Now, what's interesting here is the way that I've set up the figures. I'm not including any sort of way of like avoiding taxes. And so because someone making $750,000 is going to be in the highest tax bracket as far as federal taxes and state taxes go, and because they also still have tax on Social Security and Medicare, they're actually spending the most on taxes out of anyone on this chart here. They do have a mortgage. That's not very much of their spending. They're building equity, not very much. And then they can also spend on assets. A person or a family in this situation could probably reduce their spending and spend a lot more on assets. But I figure if you are making that much money in a year, you're probably wanting to spend a lot on luxuries too. Next, we'll go to super rich. So less tax burden than the rich family. And what that basically comes down to is the regressive taxation in the form of sales tax and Social Security, Medicare, plus the fact that once you get above $750,000, you're not really paying any more in income tax compared to anybody else. And you'll see that this group actually has a lower tax burden compared to their total income, which means that they're spending, even though they're spending much more than the rich family or the middle class family or the working class family, here I can actually see that they're spending half a million compared to 200,000. So they're spending twice as much, but that difference in income is making the spending and tax much lower, and then they're able to spend half of their money on purchasing assets. And then finally we go to the billionaire. You can see that their tax rate is honestly just above the working class, and this is assuming that they're not doing any fancy tricks to get out of spending money on tax. And so even living a life of complete extravagance, they're still able to spend over 2/3 of their income on assets. Okay, so I mentioned earlier on that these are not exact figures. They're sort of supposed to be in the vicinity of true. They should be at least believable. I did the best research that I could on what the tax burden would be for each of these income groups based off of how they're likely to gather that income. And these are just 5 example families. They're not the average family of these groups. These groups don't really have defined boundaries. But I think if you asked somebody on the street, is someone making $150,000 a year working class, they'd probably say no, they're middle class. If you ask them the same question about $5 million a year in income, they'd probably say, wow, that's super rich. But the reason I shared these is not to drive a conversation of envy. It's really just to highlight that as you go from working for your money, as the first three families did, to relying on ownership for your money, as the last two families did, your tax burden actually starts to go down. And that means that you are able to spend more of your income on assets compared to the other three families. So I said I was going to discuss some solutions on how to stop this growing wealth inequality. And I don't really have the expertise to get into details, but basically what I think it comes down to is that the most wealthy families in these examples, the super rich and the billionaire, their tax burden should be more than the other three families, the working class, the middle class, and the rich family. It really doesn't make any sense for their tax burden to be less than people who are making less money than them. Taxes like Medicare and Social Security and sales tax, which are flat and regressive taxes that cost the working class and middle class more based on their relative income, those could be replaced with a wealth tax. You may have noticed, however, that there isn't really a mainstream political movement to get this sort of change, which is why I think for right now it's important that we, number one, understand the mechanism that is driving wealth inequality to be higher and higher each year, and then spread that message so that we can build popular support for some sort of reform to the tax code, whether it's like a wealth tax, whether it's capital gains tax, but something that can level the playing field so that we're not able to afford fewer and fewer assets each year while the highest earning families gobble them all up. Anyway, thank you very much for watching. Please like the video, comment, subscribe, all of the things that let YouTube know that this is a video that's worth watching. And I will see you again next week for more economics discussion.